right, welcome back to another episode of the Know Your Numbers REI podcast. Your host, Chris McCormack, CPA, certified tax planner, focusing on eliminating the frustrations that you, the real estate investor, the entrepreneur, the business owner have felt around taxes. You guys are struggling with the chaos of making a lot of money and paying a lot in taxes and having nothing left to show for it. So today we're really going to be diving into some of the things that you can be doing differently and how the wealthy have found that tax planning and tax strategy and investing strategically have allowed them to continue to scale wealth. If you are paying $10, $20, $40, $50,000 in taxes every year, that's not only that much, but it's also what that much is not earning by not having that in your account, right? If you have $50,000 that you pay to the US government and you have $50,000 that stays in an asset that is appreciating and compounding, the difference is astronomical over the course of, say, even 5, 10, 20 years. So our goal is not only to save you money, but also to make sure that money works efficiently for you. So if you know somebody that can get any sort of value out of this, maybe you are having discussions as it's tax season and you're talking about some of the frustrations and the worries and the stress that comes with massive tax bills to the IRS, we'd love to get in touch with you. We'd love to hear from you. And at the very least, you can share this with them and hopefully it gives them a nugget to hold on to. Today, we're really going to be talking about the wealthy and how the wealthy pay less in taxes. It's no secret that the wealthy pay lower amounts in taxes. Warren Buffett has said that he's in a lower tax bracket than his secretary, and that has driven some people crazy over the years. But really, what Warren Buffett is doing, he's using the playbook, the tax code, to his advantage. And his secretary, she's probably a great gal and works hard for him, but she's not taking some of the risks that he's taking. She's not setting herself up in the same way that he is. And so the result is that he gets tax breaks and she might not. And so today, we're really just going to dive into some of the things that we've seen, both in studying some people like Warren Buffett, Donald Trump, Robert Kiyosaki, and working with our clients, right? We have clients that are wealthy and develop a great amount of wealth and have been able to save on tax and build wealth at the same time. And we see that they're doing things differently than some of those people that might not be at that level. So the wealthy don't just earn more, they keep more. And the secret is that it's all in tax strategy. Like I said, today we're going to break down on how the rich legally pay less in taxes and how you can do the same, right? You don't need to be rich. You don't have to have $1 million, $5 million in your bank account to apply some of these strategies. And that's really what got me started. I saw that I was at PwC in Boston, one of the big 4 accounting firms, working for some massive financial firms, massive investors and companies that were using the tax code to their advantage. They were investing strategically. They were using certain asset classes to bring down their income levels. They were writing off certain things that maybe the everyday American wasn't aware they could write off. I worked for financial service firms. So think of insurance companies, right? Insurance is notorious for not paying any tax, not showing any income. So I was looking at these profit and loss accounts and realizing, hey, they're doing stuff that I think other Americans can do. And then I was reading Rich Dad Poor Dad and listening to Bigger Pockets, thinking about how can I leave the 9 to 5 and help more people on a more intimate level. And so that's what we did. I jumped ship. I left corporate accounting and began this entrepreneurial journey, and with the sole focus of helping investors and entrepreneurs use the strategies that are in that playbook, that tax code, to pay less in tax. And we've been doing it now for close to 4 years. We'll be in our 4th year here in June, and we've seen some great success. But one thing that remains the same is that the wealthy are using strategies to pay less in tax. They're using that playbook to pay less in tax. And so we're going to be talking about that. I'm going to be breaking down some scenarios for you. So we find that for most high income earners, those that aren't necessarily using the tax code, aren't necessarily planning around the year, their income is growing and so is their tax bill. You make $100,000, maybe you pay $20,000 depending on your tax strategy. You make $200,000, you're starting to get up to $40,000, $50,000 in taxes. You make $400,000, you might be facing a 6-figure tax bill, which is not fun and not something we want for you. Most business owners, most high income earners just assume that they have to accept high taxes, but that's not true. We've all heard the saying, like, death and taxes are the 2 guarantees. But funny enough, some people aren't paying taxes and they're doing it legally and they're keeping a lot more money, and you can too. We have clients that pay no tax and they use strategies that allow them the ability to do that. So let's consider 2 investors, Investor A and Investor B. Both make $500,000 a year in real estate. They manage properties, they sell properties, they wholesale properties, they invest in properties. Investor A doesn't plan ahead and pays 40% in taxes, 40% of $500,000, $200,000. This is totally possible. with federal income tax, state income tax, net investment income tax, capital gains tax. Like, that is possible. Investor B works with a tax strategy and legally cuts their tax rate to 15%, saving $125,000. Right? So if you are making $500,000 and you're paying 40% in taxes, again, that's $200,000. If you're making $500,000 and you're planning and you pay 15% in taxes, that is $75,000. Again, that's $125,000 difference. Same income, different result. Investor A, no entity structure, doesn't track deduction, overpays, doesn't use the investments in real estate. Investor B uses depreciation, tax deferred exchanges, and strategic write-offs. The IRS is not helping you save. They're not telling you to go find a tax strategist who studies the tax code and does continuing education and is specialized in the industry and is going to help you pay 15% rather than 40%. The IRS is going to take whatever money they give you, that you give them. And if it's not what they think it should be, they're going to audit you. However, if they know that you're meeting with a qualified tax advisor and they know that everything is in order and that you're checking all the boxes, crossing the T's, dotting the I's, and still paying 15%, they're probably not going to focus on you. And if they do, it's going to be very minimal, and they're going to find that, hey, there's nothing to find here because they've done everything that they need to. The tax code is not a punishment, right? We think of taxes and we think of, especially this time of year, January through April, we think of this as like a high stress time. Oh no, all my money is going to taxes. Why didn't I plan ahead? And if that's you, well, yeah, one, you're in a position because you haven't planned ahead, but two, there is hope. There is a way out. Taxes don't have to be stressful. And the tax code is not a punishment. It's actually a playbook, right? Can you imagine if you had a football team that had this playbook just sitting on the coach's desk and never looked at it? No, that's insane. Some of the best teams that we're looking at these days, the Chiefs, the Vikings, the Rams, the Eagles, they have a playbook. The Lions, they have a playbook, and they are diving deep into that playbook. They're running these plays on a regular basis in practice so that when it comes to game time, they can run the plays, know exactly what play they're going to run, and succeed at it, right? The best teams have a playbook. They work off the playbook. They practice according to that playbook so that when the big games come, the playoff games, the Super Bowl, the big conference games, when those games come, they're ready and they can stick it to the man and beat their opponent because they've practiced and now they're playing according to the way they practice. The same can be for you. The tax code is a playbook. It gives you strategies that you can apply to your business to pay less in taxes. Right? We look up to these guys. We look up to the Super Bowl winners. We aspire to succeed and win championships. And it's possible in the game of business. It's possible if we use that playbook, the tax code, to our advantage. If you don't learn those strategies, if you don't practice the strategies by meeting regularly with the tax strategist, you will overpay. And I see this time and time again. There are too many Americans overpaying, especially in the entrepreneurial space, especially in the real estate space, because they just don't meet regularly. They're trying to do it all on their own. It's like the quarterback not having a head coach and who's writing up the plays and telling them how to run the plays better. If they didn't have a head coach that was doing that, they would be, yeah, they might be able to get to a certain level, but they would not be where the Jalen Hurts or the Patrick Mahomes or even the Tom Brady's are. It takes a team, it takes a coaching staff, it takes a star player, and it takes them all being on the same page of the playbook to move forward and win championships. You have to think like the wealthy. You have to use this playbook. You have to be on the same page as your tax strategist, as your financial advisor, as the people that you entrust to bring you to the promised land, to the championships. Use real estate to offset rental income. Use real estate depreciation, right? That's one thing that the wealthy do. They're diversified in the form of different assets. And most wealthy people are in the real estate space because they know that there's tax advantages. They know that they can use real estate. And maybe they're not full-time in real estate, but guys like Donald Trump and Robert Kiyosaki are full-time in real estate when they're not running the country. But those guys who are notorious and who have received backlash in the media for not paying taxes, it's because they're just using the playbook that has set them out, has been set out for them. And don't let the negative perception of the wealthy not paying taxes deter you from not paying taxes legally, right? It's there, it's for us, right? It's like, can you imagine if you were a football team and you didn't want to win the championship because you thought that there'd be negative backlash because, like the Chiefs, a lot of people don't like the Chiefs because they're just too good and they were on the verge of winning 3 straight championships and people are just tired of seeing them win. No, the Chiefs aren't like, okay, we probably shouldn't win. No, they want to win regardless of what the media says. Don't put yourself in a position where you see somebody like Donald Trump receive negative backlash or Elon Musk receive negative backlash because certain people believe they don't pay their fair share in taxes. And so you don't think you should go after tax savings because you want to pay your fair share of taxes. You want to be a good citizen. You can be a good citizen and not overpay on taxes. I would say actually that you are a better citizen for not overpaying on taxes because that means you're using the tax code to supply jobs, to supply housing, to invest and boost the economy. And those things are far greater than giving the government more money to spend in ways that we don't want them to spend, in ways that don't align with our values as the American people. So you got to think like the wealthy. You have to use real estate depreciation to offset rental income. You have to leverage tax advantage retirement accounts to lower taxable income. You have to use business structures for tax efficiency. You have to find asset classes that are tax advantages. Yes, real estate is one, but there's others. Oil and gas is another. Business in general, if you invest in small businesses, if you buy a business, you can pay less in taxes by buying new businesses. We were working with a client and we had the ability to save them $50,000 a year for the next 7 years by structuring the purchase of a business in a way that aligned with the tax strategy and what's stated in the tax code. It's possible for you. So using real estate, tax advantaged retirement accounts, business structures, making sure that you're writing things off. We saved, $9,000 in taxes by accelerating a write-off. We had the option of paying in full versus paying over time. And if we paid over time, we would have overpaid $8,000 in 2024 taxes because we had the money set aside and had the ability to leverage certain stuff that we had in our business. Then as a result, saved $9,000 in taxes this year. And so now we have $9,000 extra dollars to go and deploy. And maybe that's going to save more taxes because it can be used to put a down payment on an investment property, or invest in a retirement account, or invest in a new business that is advantaged in the tax space, right? These are things that you can do when you're thinking proactively, when you're thinking like the wealthy. The wealthy are concerned about ROI. And one of the things that often gets missed in ROI, return on investment, is the tax piece, right? You can buy investment properties, but if you get cash flow and appreciation and you're leveraging debt, that sounds great. That sounds like a great investment. But if you're overpaying on taxes, your ROI is decreasing. So why not increase the ROI by making sure that your taxes are also being saved to the maximal amount? It's possible, and you can do it today. If you want to build wealth, you need to think like the wealthy. Don't wait. Start tax planning today. I'm going to give you options for action steps, right? So consider your investment strategy. Have you brought taxes into the investment equation? And if not, okay, now's the time. Start doing some research, start thinking about it, follow along, listen to our podcast, reach out to us. We offer a free consult for anybody who is interested in saving taxes. We will take your prior 2 years tax returns. Our team will go through and study the tax return and see, were there any mistakes? Were there any missed opportunities? And then we'll get on the phone with you. I personally will get on the phone with you to go through and ask questions and find out what it is that you're thinking about, what you're stressed about, what you're challenged by, where you want to go. If this was no longer a burden, no longer chaotic around the time of January through April, what would you be doing with your time? What would you be doing with that money that you could be saving? If you had $50,000 extra dollars this year because you saved on taxes, where do you put that money? And what comes as a result? I want to know those things. And so I will have a conversation with you, get to know you a little bit, understand where you're at, and also come with findings. Those mistakes and missed opportunities, I'll tell you about those. I'll tell you the things that you can do, and it's completely free. 1 hour with me, my time, completely free for you. And then we'll see if it's a good fit. We'll move forward and see what's next and what we can do to better optimize your tax structure. That is completely free for you. I will make sure that we link the calendar in the show notes. That way you can get on our calendar and we can see if those services are a good fit. If it's not a good fit, well, then we can talk about other things. Start doing research, start investing in real estate. But if you're investing in real estate, don't just do it blindly. Make sure that you have somebody you can rely on to turn to for things like tax strategy. So your next step should be considering your investment strategy, considering the approach taken to taxes. If you haven't taken an approach, reach out to an expert. Find a tax strategist in your industry who's going to teach you the basics and help you implement. He's going to be your head coach who's using that playbook to save on tax and get you to the championship of $50,000 in taxes saved. Until next time, God bless you and keep moving forward.